Welcome to our latest deep dive. Today, we're getting into a book that Warren Buffett says literally changed his life. Benjamin Graham's masterpiece, The Intelligent Investor. Now, this isn't about hot stock tips or getting rich quick. It's about a rock-solid mindset for dealing with the, let's face it, often crazy world of finance.
Okay, so first things first, let's talk about a feeling that I'm pretty sure a lot of us have had when we even think about the stock market. Is it really just one giant, chaotic casino? A place where you throw your money down on the table and just cross your fingers? It's a really powerful fear, this idea that the market is all just luck and wild emotion.
And believe me, this isn't a new anxiety. Back in Graham's day, especially after the huge crash in '29, this was pretty much what everyone thought. Get this. A survey from 1948 found that a staggering 90% of people wanted absolutely nothing to do with stocks. And half of them, they literally called it gambling.
But into this world of fear and chaos, one man came along and introduced a system of logic and, more importantly, discipline. And in doing so, he ended up becoming the key mentor to the greatest investor of all time. That man was, of course, Benjamin Graham. He's known today as the father of value investing, and his influence is just immense. I mean, his most famous student, Warren Buffett, says Graham was the most important teacher in his life, right after his own dad.
Buffett really put it best. He said Graham wasn't just giving out advice, he was building an entire intellectual framework for how to succeed. He was planting a tree of wisdom that generations of investors, including us, can still benefit from today.
So, what was this big revolutionary idea? Well, it all starts with understanding a really crucial difference between two things that look similar but are worlds apart.
This right here is Graham's #1 rule. For him, a real investment has to pass 3 tests. First, you have to do thorough analysis. Second, it has to promise safety for your initial money. And third, it has to offer a decent return. Anything, and he means anything, that doesn't meet all 3 of those, that's not investing. That's just speculating.
So let's break that down. What does that actually mean for you? An intelligent investor is focused on the real value of the business, like they're going to own it for years. A speculator, on the other hand, is just betting on what the stock price is going to do tomorrow. One is analyzing a business, the other is basically just forecasting a number on a screen.
Now, to help all of us stick to that investor mindset, Graham gave us 2 incredibly useful mental tools. You can almost think of them as his secret weapons for dealing with the market.
Graham's first weapon isn't some kind of complicated math formula. Nope, it's a story. It's an allegory that's designed to give you psychological power over the market's crazy mood swings.
He wants you to imagine that you own a part of a business, and you have this business partner, and his name is Mr. Market. And, well, let's just say, Mr. Market is a little unstable.
And here is the absolute genius of this idea. All of a sudden, the market isn't this scary, all-powerful force anymore. It's just your weird, moody business partner, Mr. Market. You don't have to listen to him. You can completely ignore his crazy offers. Or, even better, when he's panicking and offering you a total bargain, you can swoop in and take advantage of him. The power is back in your hands.
All right, let's get to his second golden rule. This is really the heart of his entire philosophy. It's all about protecting yourself from being wrong, because, let's be honest, we're all going to be wrong sometimes.
He called this the margin of safety, and he said it was the central concept of investing. The idea is so simple but so powerful. Never, ever overpay. You always have to demand a big discount between the price you pay for something and what you've calculated it's actually worth. A great way to think of it is like building a bridge. You design it to hold, say, 30,000 pounds, but you only ever drive 10,000-pound trucks over it. It's the exact same idea. If your research tells you a business is worth $1 a share, you wait until Mr. Market is having a meltdown and is willing to sell it to you for 50 cents. That huge gap, that's your cushion. That is your margin of safety.
So this all sounds great, right? Buy cheap, stay calm, but does this stuff actually work in the real world? Well, years later, Warren Buffett gave a famous speech that pretty much offered the ultimate proof.
He asks us to imagine a giant national coin flipping contest. Every single person in America, which was about 225 million people back then, puts $1 in. Every morning, you flip a coin. If you call it wrong, you're out.
So you do this for 20 days straight. Just by pure probability, you'd have about 215 people left who managed to win 20 times in a row. Now, these people would feel like geniuses. They'd start writing books like How I Mastered the Coin Flip. But we know it was just pure, dumb luck.
But here's the kicker. What if you took a closer look at those winners and found that a suspiciously large number of them, let's say 40 out of the 215, all came from the same tiny little zoo in Omaha, Nebraska? You wouldn't say that's luck anymore, would you? You'd get curious. You'd want to know what in the world that zookeeper is feeding them.
And that's Buffett's whole point. This isn't really a story about a zoo. It's a perfect analogy for what really happened in investing. A small group of people consistently crushed the market, year after year, and they all had one thing in common. They all came from the intellectual zoo of Benjamin Graham. They were all his students.
And this all leads us to the final, and maybe the most profound lesson from Graham's entire book. It's a lesson that turns the spotlight away from the market and puts it right back on you.
Graham argued that once you get the basic ideas, Mr. Market, margin of safety, the hardest part isn't the math, it's your own temperament. The biggest fight you'll ever have isn't with the stock market, it's with your own emotions, your greed when things are going up, and your terror when they're going down.
At the end of the day, this book isn't about outsmarting everyone else. It's about learning to control your own behavior. Graham gives us a playbook for profiting from the market's irrationality, not joining in on it. And the final question he leaves us with is a simple one: do we have the discipline to actually follow the rules?